Assalamualaikum students. So for today, we will go through a new chapter which is for chapter 7 about the product offered by the commercial bank that we can call it as a remittances facilities. So we will go through first what are the learning objectives in this chapter. So in this chapter, we will learn various types of remittances offered by the commercial bank. Okay, firstly, we will go through first about the cashier order. Secondly, demand draft. Thirdly, telegraphic transfer. Fourthly, online transfer. And lastly, about the standing instructions. So in this chapter, basically, I will explain about the usage for each remittances product and elaborate more in terms of the process that we apply to the remittances account. Okay, and we will go through also about what are the features for each product of the remittances for their customers. So, what is the meaning here for the remittances facilities? So, for the word of remittances, this is a sum of money sent in payment for something, or we want to transfer a fund that will be done in a banking system. So, if we as the customers, we want to transfer the money or send in payment for something, so we can use a product of remittances to transfer of fund that will be done in a banking system. So, this is a service provided by a commercial bank to its customers through a remittances product that we can call it as a cash, for example, like a cash order, demand draft, telegraphic transfer, and the other. Okay, so these are the types of remittances product that we will go through today for this chapter. Firstly, for the cash order. So what is the meaning here for the cash order? Okay, so for the cash order, this is also known as a banker's check. Okay, so I think you already familiar, right, with the word of check. Okay, so for the cash order, this is a check issued by the bank payable to the order of specified payee for payment within a local area. Okay, so we can say that for the cash order, this is a form of check drawn on a bank and they must have signatures, okay, on top of the cash order. Okay, so the meaning here for the cash order as compared to a check, okay, so cash order is a check issued by a bank, okay, and usually for this type of remittances does not have default in payment. Okay, so let's say if you are a businessman or businesswoman, in order for you to have a safety transfer of payment to the third party, okay, usually they will use this product of remittances, which is a cash order, to transfer the payment to the other party. Okay, so for the cash order also, we will go through to the next slide. Okay, so for the cash order, this is also known as a banker's check. Okay, so this is issued by a bank and like I said, this is normally does not have a default in payment. Okay, and it is used when payment are made by a personal check is not accepted and cash payment is not advisable. So let's say if you want to make a payment to the third party for 10,000 ringgit. Okay, maybe it is unsecured for you to bring the cash for 10,000 ringgit to transfer the payment, to make the payment. So you can use this banker check, okay, which is drawn and payable by the issuing bank or the branch bank itself and transfer the payment, the fund to the third party. Okay, so before we want to use this type of banker's check, okay, we must fulfill a certain documentation. Okay, so if you want to apply this type of banker check, okay, a customer need to furnish this following information in order for the cash order to be issued by the check. Okay, so you have to give your name and address of the applicant. Okay, and then the ID or the identification card is also required, okay, to be produced to the bank officer. Okay, and then the name and address of the beneficiary, which is to the person who will receive the fund. You must state the name and address. Okay, and then the application date, the amount involved in the cash order. Okay, and then if you have to mention whether the transfer made by cash, check or debiting the applicant's account. Okay, so this is the information needed in order for you to use the banker check. Okay, so what is the information required to apply the cash order? Okay, so in order for us to apply this type of remittances, okay, we have to give all this information and also the features that must have, okay, on the cash order. Okay, firstly, in the cash order, they must have the name of beneficiary, which is the person that you want to transfer the money. You must state on the bank cash order. Okay, and then sometimes customers, we use a typewritten in order for them to difficult to erase or alter, to prevent the others to erase or alter. Okay, and then you must state the amount or sum of the money that to be remitted. Okay, which is you also can be typewritten or you can write by your own self. Okay, and then the other features for the bank cash order. Okay, there must be a crossing. Okay, that usually be crossed by stating account payee. Okay, and then they must have a signatory, which is they must have a signature, okay, which is signed by the officer of the bank. Okay, and then they must have a reference number, which is the staff numbers below the signature. Okay, so this is the features of the cash order if you want to transfer the money. Okay, and then other than that, they must have the encashment, which is they must presented the cash order over the counter. Okay, and then if you want to make an encashment also, it should not be crossed. Okay, and then if you want to cross the cash order, only the applicant can request the closing to be cancelled. Okay, and then once the beneficiary or the person that you want to transfer the money, they need to sign at the back of the check as an acknowledgement that they will already receive the cash order. Okay, and then the IC also will be used, okay, in order for them to acknowledge that they already received the money. Okay, so this is the features here for the cash order. So what are the benefits here for the cash order? Okay, so we will go through for the benefits of cash order. So this is an alternative way to transfer money to the customer's beneficiary, and also is very safe and convenient, which is the customer can withdraw or transfer funds from their account without hassle of carrying any cash. Okay, and then it is very flexible, which is the customer beneficiary has the option to deposit the cash order. Okay, so these are all the benefits of the cash order to the customers. Okay, so this is the features here. Okay, what I can say here, this is the example of the cash order. So this is the information required in order for you to use the cash order to transfer the money to the third party. Okay, okay, next we will go through to the demand draft. Okay, so demand draft, this is usually used to transfer money in the same area, but demand draft is used to remit a fund to beneficiary who is at different area, which is maybe if you want to transfer the money in a different state, different town, area or country, so you can use this type of remittances. Okay, so we can say that for this type of remittances is being addressed required to pay on demand draft to the person, okay, or beneficiary by using a draft. Okay, so this is for the demand draft. So we go through, okay, the meaning here or the definition for the demand draft. Okay, so for the demand draft, this is a check drawn by a bank on its head office, on a branch or on another bank for payment outside the local area. So, like I said before, if you want to transfer the money to the different area, different branch, so you can use this type of demand draft. Okay, so for the demand draft, okay, so this is the example here for the process of a demand draft. Okay, at the first place, the bank will prepare a demand draft. Okay, and then the amount of draft is taken from an account of the customers requesting the draft. Okay, so let's say from the customer A, they request to transfer 3,000 ringgit to the third party. Okay, from the customers A in Kuala Lumpur, they want to transfer the money to the customers in Johor Bahru. Okay, so for this amount of draft is taken from the account of the customers in Kuala Lumpur in order to transfer the money to the customer in Johor Bahru. So, and then after that, they will transfer to an account at another bank, which is in Johor Bahru. So, this is the example here. So, we have a certain parties involved in the demand draft that we can call it as a drawer. Okay. Okay, we have a drawer here. Okay, and then we have a drawee and also the payee. Okay, so who is the drawer? So, drawer is the person requesting the demand draft, which is the customer itself that want to transfer the money to the third party. So this is the drawer. Okay, and then the drawee. Drawee is the bank paying the money. So drawee, we can say that this is like on behalf of the drawer to transfer the money to the payee. Okay, so we will use the bank to transfer the money to the payee. So the payee will be the person that will receive the money. Okay, so based on the CIMB, okay, they have a minimum value if the customers want to use the demand draft. So the minimum value here for the customers want to use the demand draft is 10,000 ringgit, and then they will charge a certain fees, okay, based on the for using the demand draft. Okay, for example, 2 ringgit or 5 ringgit. Okay, so we can say that for the demand draft, this is like a document that will be issued by a bank that we transfer the money to the third party, to another bank. Okay, so for example, like Maybank in Kuala Lumpur, they will transfer the money to the Maybank in Johor Bahru, so they can use the demand draft. Okay, so what are the features here for the demand draft? Okay, so demand draft is using to transfer a fund within and outside the country. Okay, and then if you want to transfer, if the fund are to be sent abroad, the draft is drawn on a bank in a foreign country. Okay, and then they will change to the appropriate currency. So let's say if you want to transfer from Malaysia to Indonesia, okay, and then we will convert the currency to rupiah. Okay, so this is for the demand draft. Okay, and then for the demand draft is paid by the customer at the time of issued, which is the customer send the draft to the beneficiary. So you have to pay a certain charge, okay, and also you have to pay with the cost payment towards a demand draft. Okay, so this is for the demand draft. Okay, so for the demand draft, we have two types here. For the demand draft, we have a local and also foreign demand draft. Okay, so when we say for the local demand draft, this is drawn in a Malaysian ringgit and payable in Malaysia. Of course, in Malaysia, because we use the currency of Malaysia ringgit. Okay, and then for we have two types here. For the local demand draft, we have for outward local demand draft and inward local demand draft. Okay, so for the outward, okay, this is usually if we want to transfer the money. Okay, we want to transfer the money to the third party. Okay, we can use for the outward demand draft, which is the demand draft will be drawn by the issuing bank. Okay, the bank that we issued the money to transfer the money to the third party, we can call it as outward local demand draft. But for inward which is we will receive the money from the third party. Okay, so for the inward local demand draft, this is issued by other bank and received by a drawee bank. Okay, drawing bank means that the payee's bank. Okay, so this is for the inward. So outward, if we want to transfer the money. Inward is if we will receive the money from the third party. Okay. Okay, and then same goes for the foreign. Okay, the meaning for the foreign demand draft, it will be in a foreign currency. So of course, if we want to transfer the money to abroad, so we have to change the currency. Okay, and then we for the foreign demand draft also have two types. Okay, firstly for the outward and inward. Okay, so for outward, it is necessary to mention the amount of currency. So if you want to transfer the money, let's say to Singapore, so we have to change the currency to the dollar Singapore. Okay, and then for the inward, it is issued by other bank from the overseas bank, and they will receive by the Malaysian bank. Okay, which is by a drawee bank in Malaysia. Okay, so this is for the inward foreign demand draft. Okay, so these are the differences here for the types of demand draft. So we have two types, you have to remember. So we have foreign and local demand draft. And then for foreign demand draft, we have two types, outward and inward. Okay, and then for the local demand draft, we also have outward and inward. Okay, but the main differences here for the local, they must be payable in Malaysia and in the Malaysia ringgit. Okay, so we have here for the example for outward demand draft. So let's say for the local, we want to transfer the money from Johor, which is in Segamat, to Damansara. So Maybank in Segamat will drawn a demand draft to the Maybank in Damansara. Okay, but for inward, this is we will issue, right? We will receive money from the third party, which is if you are in a Maybank in Johor, which is in Segamat, so you will receive a demand draft drawn by the Maybank in Johor Bahru. Okay, so because this is inward, we will receive the money, okay, from the other bank's branch. Okay, so this is the differences here for the demand draft. Okay, so what are the process involved in demand draft? Okay, so if you as a customer, you want to use the demand draft as a product of remittances, so you have to fill the form first. Okay, so for the form, okay, you have to visit any bank and ask for the demand draft application form or fill the form online. Okay, so for nowadays also you can easily search for the CIMB demand draft, Maybank demand draft, so they have the online form for the demand draft to fill in by the customers. Okay, and then you have to fill in for all the form details. Okay, so for example, who is the beneficiary that will receive the amount that must be stated, okay, on the demand draft, the place where the demand draft will be encashed, whether in local or in a foreign country, okay, the check number, the bank's account number. Okay, so this is the form details. Okay, and then you have to pay the demand draft charges, okay, which is will be charged by the bank itself. Okay, so this is the form the example of form of demand draft. Okay, so you can look here, this is the example of form and we can easily get it, okay, through online. Okay, next we will go through the other types of the remittances that we can call it as telegraphic transfer. Okay, so for this telegraphic transfer, this is usually if we want to transfer the money or transfer the fund electronically. Okay, which is whether we can use a cable, telex, telephone transmission, and also we can use a SWIFT. Okay, that we can call it as Society for Worldwide Interbank Financial Telecommunication. Okay, because for this telegraphic transfer, this is different with the check, cash order, check, and also demand draft because they do not require any signature. Okay, so what is required here for the telegraphic transfer, they will use a key which is we have the authentication record in order for us to transfer the money to the third party. And of course, telegraphic transfer also we can use it domestically or whether you want to transfer the money internationally, okay, to the foreign country. So we can say that for the telegraphic transfer, this is fast mode of remittances, okay, in order for us to transfer the payment, the fund to the third party. Okay, so what is the definition here for the telegraphic transfer? Okay, so for the telegraphic transfer, let's say before, this is a fastest mode of money transfer in or outside the country. Okay, so let's say if you want to transfer the money in a local or in a foreign, you can use the telegraphic transfer because this is the fastest mode. Okay. Okay, and then for the telegraphic transfer, or we can call it as telex transfer, this is often abbreviated to telegraphic transfer. This is a term used to refer an electronic means of transferring the fund. So we will use any electronic ways to transfer the money. And once we use for the telegraphic transfer, they will charge you with some fees. Okay, so a transfer charge is often charged by the sending bank and in some cases by the receiving bank. Okay, so they have usually for the telegraphic transfer, like a demand draft, maybe RM2 to RM5. For the telegraphic transfer, usually they will charge you with the more funds because this is like a fastest mode, right? So they will charge you with the more fees to the customers. Okay, so for the telegraphic transfer, we also have two types, or divided into two types. Okay, firstly, okay, we can call it as inward telegraphic transfer. So for the inward, okay, which is we will transfer the money that come from other bank, other branches or agent, maybe from the local or from the overseas, because inward we will receive the money, right? So that's why the money will come from the other bank. Okay, and for the inward telegraphic transfer, it can be in or out of the country, whether you will receive the money from the local country or from the overseas country. Okay, and then to remit the funds, the bank has to contact the beneficiary. So the bank will contact first the beneficiary to transfer the money. Okay, so if the inward telegraphic transfer is in the foreign country, so of course the ringgit Malaysia must be converted, okay, based on the buying rate of the currency. Okay, so this is for the inward. Okay, and then we have for the outward telegraphic transfer, which is if we want to transfer the money to another bank, another branch or agent, and it also can be in local or in overseas. So for the outward, it can be a local outward telegraphic transfer, which is it can be made in ringgit Malaysia. And for the overseas, if you want to transfer the money to overseas, so we have to convert into the foreign currency. And the cost also will be involved, which is they will charge you with a certain charges based on the exchange of the local to the foreign currency. Okay. So what are the process of telegraphic transfer? So for the process of telegraphic transfer, this is usually easily for the customers can get this product through online banking. So you just log into any online banking in Malaysia, CIMB Banks, CIMB Clicks, Maybank to you, okay, and then you can search for the product of telegraphic transfer, or you want to send money to overseas. Because usually for the telegraphic transfer, the customers will use this telegraphic transfer to transfer the money to overseas, because for the customers to transfer the money to the overseas, okay, they need in the fastest mode, so they can use this product of remittances to transfer the money to the overseas. Okay, and then the customers have to fill in the details, okay, if they want to transfer the money by using this telegraphic transfer. Okay, and then if the customers cannot do it online, so they can go to the branch, and then they will have to bring the documents needed. Okay, and then they have to check in terms of the charges. Okay, because for the telegraphic transfer, they have to transfer the money, okay, to the customers, and then they also have to pay with the certain charges. Okay, so this is for the telegraphic transfer. Okay, so for the fees involved, this is the example here for the fees involved from the CIMB bank. Okay, so they will charge for the local bank, for example, RM5. For the foreign bank, they will charge for the RM10 to the customers. Okay, and then we have certain rates, okay, that we ask by the bank directly to the customers. And then the duration, sometimes it takes 1 to 3 days to transfer the money to usually to the foreign country. Okay, and then the advantage here, this is a process, is very simple and the fastest mode of transferring the money. Okay, and then for the disadvantage here, which is this is a necessity for the internet access if we want to use for the telegraphic transfer. Okay, so for the fees and also charges, Okay, you can search from the CIMB bank, from any commercial bank in Malaysia to know about the current charge or current fees for the telegraphic transfer that will be charged to the customers. Okay. Okay, next we go through to the other types of the for product of remittances that we can call it as online transfer. Okay, so for the online transfer, this is I can say that currently, okay, the customers will use this online transfer in order for them to transfer the fund, transfer money from one bank, okay, to another bank. Okay, so for the online transfer, this is as electronic transfer of money from one bank account to another bank's account. Okay, which is we can use this online transfer, okay, through a computer-based system without any paper money, okay, changing hands. Okay, so in the online transfer, okay, we can say that this is one of the mode of transferring the money by using any computer-based system. Okay, but it is not a requirement to have the internet access. So any computer-based system, for example, like microchip, processor, so if we have for all this mode of system, we can say that this is one of the product of online transfer. So the product offered by the bank or commercial bank for the online transfer, which is the customer can be done through, firstly through internet, okay, that the customers usually nowadays we use for the internet banking. Okay, and then we also can use for the online transfer by using ATM machine, and also we can use for the online transfer by using a phone banking, or we also can do it manually. Okay, so this is for the online transfer or electronic transfer of money from one bank to another bank's account. Okay, so this we look first in terms of what are the uses of online transfer. Okay, so for the online transfer, customers usually use this type of remittances to paying bills online. So let's say if you want to pay for any you want to pay for any electric bills, water bills, so you can use for the online transfer. Okay, and then sometimes if customers want to check in terms of their bank statement, they also can use for the online transfer, which is they can check to ATM, internet banking, okay, in order for them to view all the transactions that already done by the customers. Okay, and then if we customers want to transfer money between account, let's say if the customer want to transfer the money from one account to the third party's account, so they can use online transfer. Okay, and then for the online transfer also have the mode for the mobile banking or e-banking, you also can use for the online transfer. Okay, and then if you want to transfer the money to any applicants, we can use this mode of online transfer. Okay, so what are the advantages here for the online transfer? Okay, so firstly is very time saving. Okay, because the money will be transferred between virtual account. Usually if we want to transfer the money to a virtual account or maybe demand draft, right? So sometimes it takes a few days. But for the online transfer, okay, sometimes it can be an instant transfer of money. Okay, so it's very time saving. Okay, and then reduce risk of loss and theft, because for the online transfer, okay, if you want to transfer the money, sometimes we do not have to bring any cash to transfer the money to the third party. Okay, let's say if you forget, okay, to bring your wallet, okay, and then sometimes if you want to transfer the money to the third party, you do not have to bring any cash, right? So it can be prevent, okay, from any robbers for you to transfer the money to the third party. And then for the online transfer, it's very user friendly because it works 24/7 for the customers, and then it's very convenient because you can transfer the money anytime and anywhere. Okay, Okay, and then what are the disadvantages here for the online transfer? Because they have a certain restriction. Okay, sometimes the account they have a limit amount or maximum amount in the account. Okay, and then for the online transfer, the risk of being hacked or scammed is very high for the online transfer, because this is the worst situation when the system of the company has been broken. So it can be a quite not safety for the customers to transfer the money to the third party. Okay, and then in terms of the lack of information, because all the information including the amount, time, recipient can be stored in the database. Okay, so people outside of maybe certain customers, if they want to transfer the money, okay, so the database of the customers can easily be being stored by the other person. Okay, and then the necessity of internet access. Sometimes if you use, especially for the online transfer like e-banking, internet banking, so they must have internet access for you to doing any online transfer. Okay, so these are the advantages here and disadvantages of the online transfer. Okay, so what are the process involved in the online transfer? Okay, for example, like a Maybank to you. So I think you already know, right, in terms of the process for the online transfer, like Maybank to you. So you can just go through to the website, and then you can transfer the money. And then for the online transfer, sometimes by using ATM, they have a limit amount, and same goes for by using e-banking, they have a limit amount. Okay, so for the online transfer, okay, let's say if you want to transfer the money from Maybank to the CMB, okay, so it will help you to transfer the money between your own Maybank account to the third party's account instantly. Okay, so this is what we can call it as an online transfer. Okay. Okay, so these are the other benefits here by using online transfer fund. Okay, because it's very fast, very convenient for the customer. It have a very flexibility. Okay, you can view, you can print your bank statement, okay, at any time, any place, and it is very security. Okay, because you do not have to bring any cash payment to transfer the money. Okay, and then they do not need any signature. Okay, it's very convenient. Okay, and then it's also is free. There is no charges for this online statement service. Okay. Okay, and lastly, for the product of remittances, we have for the standing instructions. Okay, so what is the meaning here for the standing instruction? When we call it a standing instruction, this is an instruction given by the customer to the bank to remit a regular payment, okay, of transferring the fund to the same person or beneficiary. Okay, so let's say if the customers want to transfer the money to with the amount of money or fund to the same person or to the same beneficiary, so they can use this standing instruction, okay, in order for the customers to transfer the payment, for example, like payment for their loans, insurance premium. Okay, and then if they want to pay a certain bills, okay, every month, because for this amount of money, they have the, we can say that they have a same amount and the same beneficiaries, okay, every month to transfer the money. Okay, so the customers can use the product of remittances. Okay, firstly, we look first in terms of the definition of standing instruction. So for the standing instruction, this is a way of making automatic payment to transfer the money to the third party. Okay, so for the standing instruction, okay, the customers, before the customers want to apply for this standing instruction, the customers have to fill up with the information related. For example, they have to give for any for the information for the name, address of beneficiary, amount involved, okay, what is the amount of payment that they want to transfer the money every month, okay, and then what is the date of payment and from which account the remittances is to be done. Okay, so for the standing instruction, okay, this is, we can say that the instruction given by the customers to the bank, okay, to make a regular payment or transferring the fund to the same account or to the same beneficiary. So usually for the standing instruction, this is involved with the transaction, okay, which is the amount will be transferred or paid with the fixed or same amount. Okay, so let's say if you want to paying the bills 100 ringgit per month, okay, every month you have to transfer the money, or maybe if every month you want to transfer the money for the children's pocket money 100 ringgit per month. So you can use this product of remittances, which is a standing instruction, because it involves with transferring the money with fixed and same amount every month. Okay, so for this product of remittances, which is a standing instruction, this is not suitable for paying a bills. For example, like a credit card, electricity bills, because they do not involve with the fixed amount, right? So that's why it is not suitable for paying a variable bills. Okay, so if it involves with the fixed amount of bills, so they can use for the product of standing instruction. But for the bills that involved with the variable amount, okay, for example like credit card, electricity, so the customers can, is not suitable for the customers to use the standing instruction. Okay, and then for the standing instruction, also known as a standing order and banker's order. Okay, for example of transaction that you can use for the standing instruction, we can use in terms of the, if you want to pay in terms of the insurance premium, because this is fixed every month for the customers to pay the amount of insurance premium to the insurance company. And then let's say if you want to make a monthly gift to your parents, monthly, we can say that a pocket money for your parents, for your children with a fixed amount, so you can use for the standing instruction, because they will deducted from your savings account every month with the fixed amount. Okay, and then if you want to make a rental payment also is a fixed amount, right? So, and the same amount, so you can use this standing instruction. Or if you want to make any payment for the mortgage loan, housing loan, vehicle loan, you also can use this standing instruction to transfer or pay the fixed amount of money to the bank's account. Okay, so this is for the standing instruction. Okay, so for the standing instruction, this is commonly used to make a payment, for example, like mortgage loan, car loan, or paying a bills that have a fixed amount, not a variable amount. Okay, and then company always use this method to settle their payment monthly, usually to pay the salary to the workers. Okay, for example, if the company employers, they want to pay a fixed payment monthly to their workers, so they also can use for the standing instruction. So the other payment that can be done for the standing instruction, okay, which is if you want to make a payment for the pocket money for your parents, children, okay, housing loan, or any credit card payment that have a fixed amount, okay, and any monthly bills that have a fixed amount. For example, like Astro, you also can use for this standing instruction because they have a fixed amount, okay. But credit card, only credit card that have a fixed amount, not a variable amounts, okay. So how you can applying for the standing instruction, okay. So anyone that have a savings account or current account, they can apply for the standing instruction. So how is it works? Okay, because for the standing instruction, it works, which is you have to fill in for all the forms instruction, okay, manually, or you can also fill in through online. Okay, and then the bank will transfer on the effective date based on the frequency of payment until the termination payment. So let's say if you stated the date of payment from January 2020 until December 2020, so the bank will transfer based on the effective date, okay, and until the termination date, okay. And then for the standing instruction also have a certain advantages and also disadvantages. For the advantages here for the standing instruction, they will never miss a date of regular payment. So you do not have to worry, you do not have to transfer the money by your own self, all will be done automatically by the bank itself. And then you also can control how much money to pay and also when to transfer the money. And you do not have to, there is no waiting in queues. You do not have to go to over the counter to transfer the money or paying the bills, and you do not need to carry a large amount of cash to transfer the money to the third party. Okay, and then for the disadvantages here, you have to make sure that there is enough money in your account to be deducted, and you have to remember when the money will be deducted. Okay, so these are the other advantages here and disadvantages for the standing instruction. Okay, we also have a certain similarity between the standing instruction and also direct debit. Okay, you also can read by your own self. Okay, and then for the standing instruction, the customers firstly have to fill in a certain form, okay, instruction form before they want to proceed with this type of remittances, because for this form is very important because they have a details information towards what is the bank's account, okay, and then the date of payment, okay. So this is for the standing instruction form that must be filled in by the customers. Okay, so we already go through for all the products here for the remittances, started from the cashier order, okay, until lastly we already discussed for the standing instruction. Okay, next you can refer from the past year question. So in order for you to do the exercises for this chapter, so you can go through, for example, from past year question March 2017. Okay, they ask you in terms of the types of telegraphic transfer. Okay, and then the information needed for the cash order, and then from past year question March 2016, okay, they ask you about the cash order, which is the features of the cash order. Okay, and then lastly from the March past year question March 2016, the question asks in terms of the advantages of the standing instruction. So you can refer from the other past year question in order for you to do the exercises for this chapter. Okay, that's all for today class. Thank you for your cooperation. Okay, and then if you have any question, please do not hesitate to ask me any question that related with this chapter. Okay, thank you and Assalamualaikum.